All right, folks. Good morning. This is what we're going to cover today. We don't plan on taking too much of your time, as we always suggest, but always be open to question and comments later on. But this is what we're going to try to cover this morning: the fundamental trading outlook, the things that we concentrate on trading, the fundamental announcements. These are calendar announcements that are already set. They're scheduled. This is not something that we have to consider to be an intraday trade. This is something that's projected, and they give us an outline. And then we're going to look at some past announcement charts specifically too. And then we're going to take some questions and comments. What we're having this meeting for, guys, is to get the overall temperature of what you guys need us to do in a trading fundamental announcement, because there are certain things that I do during a fundamental announcement that may not be necessary for what you need. So I want to show you guys what some of this activity looks like, and we want to address the things. Do we need naked charts up? Do we need trend lines up? Do we need Fibonacci levels up? Do we need support and resistance up? What do we need to be productive in establishing an environment to where we can all comfortably and efficiently trade this thing live? So we'll just jump right into this thing as far as the fundamental trading outlook is concerned. I'm gonna drag a screen over and probably push this stuff out of the way. Right here, guys, this is your blog post, and we write this every Saturday. And of course, we have a chart in there and have some little commentary in there. This happens to be the March 4th weekly recap. I won't write one today because we didn't trade very much last week because of the travel arrangements that we had, and we were kind of out of the market for the bulk of the week. But what you can see after this commentary that we're talking about, things that we're looking at, things that we expect to happen, we also have down here, right down here in this what else to watch for. You can see right here we have this New Zealand RBNZ rate statement, and we had it scheduled for March 9th at 3 p.m. This is something that we're going to trade. Now, a lot of times we are already in a position to trade it, but if we're not, we still want to at least watch the activity of that particular announcement to see how it affects our trade. Now, there's another strategy that we will handle and address as that time comes closer if we're already in a position. That's a totally different strategy. We're talking about walking right up to the door of a fundamental announcement without an active position being on and trading it live. So you'll also see down here we have the Euro ECB press conference. Now, a lot of these things that are scheduled, if they meet the market expectations, a lot of times they won't do too much. Sometimes you'll have crickets and sometimes you'll have fireworks. It all depends on what the actual announcement releases. So we'll move this thing out of the way with the understanding that we already have this data compiled and we push it to you by way of that blog post. And it's you can log in there in PipFlip and you can read the blog post. I try to have them out every Saturday, no later than noon or 1 p.m. Eastern time, so we can have a grasp, an overall outlook of the calendar events that we're going to go after the following week. In addition to that, Curtis has given me some insight on maybe we can capture or put together a complete monthly calendar for the things that we want to address. That way we can give all of our traders ample time to schedule at or around these specific calendar events. So that's something that we're going to start to work on next week. We originally committed to saying that we would start to trade these things live in May, on May 1st. However, that directive has changed. The directive has changed because we all are going to be in San Antonio in a couple of weeks, and I want to get in front of our gathering and meeting of the minds in San Antonio so we don't miss the window of opportunity to discuss what we're doing versus presenting what we're doing. That's why I've made the decision to move it up 2.5 weeks so we can get the overall feel for it going forward throughout the next 6 or 8 weeks that we're going to all be together trading these fundamental announcements. So we'll go ahead and we'll take a look at some charts to show you guys what it is that we look at during these fundamental announcements. This right here is the Euro New Zealand, and this was the tailspin from that New Zealand RBNZ rate statement. And if you look right here, the statement was at 4 o'clock. This is a 2-hour candle. So all of this upwards pressure came from that announcement. And this particular candle right here was 375 pips tall. So if we had traded this on a 15-minute time chart, you would have saw the upwards pressure starting to push. And after we get that directional confirmation, that's when we like to enter that trade. By no means am I suggesting that we're going to enter right here at the low, which is 1.61860. I'm not suggesting that, because a lot of times when you start to play around this level, you get caught in the whip, especially if it's a statement. Now, a lot of these things are digital announcements, and all the traders see them at the same time. Those are the things that we like to trade. For instance, non-farm payrolls, and I'll pull up that chart to show you guys that how that played out on yesterday. However, the purpose that we're talking about today, excuse me, is to look at this particular candle right there that's defining the parameter of the up arrow and the down arrow being 375 pips. That's a good little bit of money right there when you know it's coming, versus being in an intraday trade and something explodes or something happens to push these charts north or south. When we know that this type of volatility is coming, like Mr. King suggested a few weeks ago, how do we capture that moment? How do we do that? The best way that I can suggest that we can do that is to schedule these calendar events, make it known to all of our group, and say, hey guys, on March 9th at 3 o'clock, this calendar announcement is going to be released. So let's get together on March 9th at 2:30. Let's get all our charts set up. Let's get all our trend lines drawn. Let's look and let's analyze the information. Let's look and analyze the technicals and get ourselves in position. And as the announcement comes out, I'll be trading it, obviously. And I just want to make that live environment so you guys can be, it'll feel just like you're sitting right beside me at my trading desk, and we can trade it live. The second one that we wanted to look at is the Euro US. And that particular calendar event right there came from the US. Anybody know what that announcement was on the 29th?
Non-farm payroll?
Jobs.
No, jobs.
Non-farm payrolls was yesterday. Give me just a second. I'll pull that up. And
It was the jobs report.
no, sir. Forgive me for letting that escape me, gentlemen. But I'll tell you what that announcement was here just in a second, because we had that one charted also, and I'll tell you just a second what that was, just for clarity. March 9. That gentleman right there is crude oil. That right there was crude oil that day. And that same day we had.
I thought you were talking about last night.
Yesterday. No, sir. I'm going to show you that because I got that chart on another screen. But this right here came off of the crude oil inventories the same day that the Canadian bank rate came out. So there was a lot of activity that happened that day. However, we were looking at this particular chart, and this is that directional momentum that we talk about all the time, because it opened here on that calendar announcement and turned into a trending day and pushed all the way up. It pushed all the way up for a day and a half off that announcement. Now, there was obviously some other things that happened during the course of that day to continue that upwards pressure, but when it turns into a trending day, a lot of times it will take off, break out of its normal trading range, and continue to go north or south, whichever direction it originally traded in. That's what I call trading in the direction of the momentum. So we don't have to wedge it. We don't have to capture it or put it in a pennant. We can just sit back and comfortably wait for the confirmation of the direction and then trade it out in that direction, because we knew that this information was coming. That's what we're wanting to do. What I wanted to talk to you guys about today, after showing you these types of moves, how do you guys need the data to look? because this chart right here is very watered down. The only thing that's on it is a stochastic and a couple of horizontal lines. Normal trading environment, I got all kind of stuff on these charts. Not so much to where it's so convoluted that you can't see the candles, because I only like to have three things on the chart: a Fibonacci, some support and resistance, and some trend lines. That's all you'll ever see on my charts. Now, we can get into Bollinger Bands and Elliott Waves and all that stuff, but it's not necessary for a fundamental announcement. You really do need to have your charts as dry and as naked as possible, so you're not over analyzing the chart and you're looking at no more than the direction. But we also want to keep in mind that there is a Fibonacci level that's getting ready to be close to fulfilling, because that's what fundamental announcements are designed to do. They're designed to quickly fulfill the fundamental level, the Fibonacci level, rather than the Fibonacci level fulfilling the announcement. Is that fair enough?
Gotcha.
So with that said, guys, now is the time. I have my pen and paper here. If you tell me in your own trading experience, in your own fundamental analysis, when you've seen these, everybody's seen it, guys. Sometimes you'll be looking at a chart and we call each other and say, "Oh my God, have you look at the CAD pairs? They're going absolutely bananas. What happened?" Well, that was probably the overnight rate and or the rate statement that came out at 11 o'clock. That's what's going on right now. Can we take it right now? Should we take it right now? Well, let's pull it together. That's why we wanted to take this environment and put it live, so everybody sees the same stuff and we can trade it right beside each other. Kind of like the guys do in the pip rooms, just like a normal trading room, but this is just going to be exclusive to you and us.
Sounds good. I think what you said, Xavier, is spot on, because when you're talking about the 786, the 618s, and the 382s and that sort of thing, if you got the fibs on there, I know one of my personal challenges is drawing my fibs, well, getting my chart to do what I want it to do, and get my fibs to match what I'm hearing from you. And so plotting those support and resistance and fibs for me would be great.
Okay.
And simplified. Yeah.
So you want to have? I'm sorry. I just want to clarify what you're saying. You want to have the fibs on the chart as we trade these things live?
Yeah, that would work great for me.
Okay, perfect.
I was gonna say I agree. For me, I think I have a pretty good understanding of what the charts look like once they're there. Kind of like Mr. Booth said, drawing it is a little bit of a challenge for me, but at the same time, once they're there, I can kind of make sense of it. And then if there's a whole bunch of other stuff, I'm like, okay, this is a little bit overload. I don't want to get overloaded. I want it to be, as clear and clean, as concise as possible, but giving me the information to be able to kind of know what I'm looking at. So those three, is good for me. The fibs, trend lines, and then your basic stochastics, and that's perfect for me.
Okay.
Yeah, and it kind of lines up with what you just said, Xavier. Just to clarify, it kind of lines up with what we're being taught with Shima's class anyway, because that's kind of where we are with his class. Support, resistance, trend lines, and fibs is basically kind of where we're at right now. Okay,
I'm gonna jump in for just a second and show you guys and see if this is what you need to see. I think we may be getting a little closer to our objective. This is of course this is in your blog post also, but if you guys can see this right here at the low end of this particular chart, I drew an AB boundary of Fibonacci level right here. Now, if you guys can see, I trade this all the time, guys, and this is what we call a money trade. And here's what it looks like. If you can see, right, do you see this black downtrend line?
Gotcha.
Okay, that black downtrend line. Do you see this 786 level that's in blue?
Yes.
Okay, this downtrend line and the low of this bar right here, this red tail right there, it came right here to the 786 at the back side of this trend line. This is what you guys hear me talk about when we say we're going to trade the backside of this trend line. Because right here, when it broke that trend line, it's going to come back down here and test it. 80% of the time, it'll test it. Now, sometimes it'll break and just take off. Now, during this particular candle, there was no appropriate entry. Yeah, we could scalp that all day long. We can. However, I'd rather wait for this thing to come back down to this 618 level right there, or come down a little deeper to the 786, because we had a webinar a couple weeks ago where we talked about the risk to reward at the 786 versus the 618. You guys remember that?
Yeah, three to one, or
yeah, 3-1, 4-1. Now here's where the magic comes in, guys. We had the 786 right there. That's where it came to within 2 or 3 pips, which you would have got filled on your spread anyway. Now look where it went. It went to the 127. Yes, it pushed up a little deeper and almost came to the 168, but I'm comfortable taking these 340 pips right there on that bar. You guys see that?
Yes, sir. Yeah.
Now, this right here, if this is the type of stuff, when you say you want the fibs on there, we can actually draw this and we can have a projection of where it's going to go. Now, when we trade calendar events, a lot of times we'll take this limit right here and move it out of the way, because it could go 200 pips. It can go 150 pips. It can go, God knows how many pips it can go, depending on how heavy the data is. Now, if we decided that we were going to limit out right here at 166.713, and this candle kept on pushing, and there was 250 pips left on the table, of course, nobody's going to complain about capturing this block right here of, let's just call this 200 pips. That's still a good day on anybody's count. But if we can decide collectively to move this limit, or even individually move that limit a little bit out of the way, make that limit, make it not to make sense. If you get that thing out of the way, then you have the power of saying or deciding when you're going to close that trade. But we also want to keep in mind that this Fibonacci swings a really big bat, guys. It's not going to go north of the screen. That's just not practical. Of course, we would like to see this thing go 3,000 pips today, but that's probably not going to happen. So if we can just take a conservative and a meaningful approach to the fundamental announcements based on the Fibonacci, no matter which swing it is, it can be this swing or it can be this overall swing, they're probably going to be real close to the same, depending on where it retraced to on the overall swing, because this overall swing may have only came back to the 382, which would have took us right back here to the 618 or the 1.618. So if you guys are needing this trend line right there to identify the break, and you need that Fibonacci up there to identify the exit and the entry, we can put that up there too. That's not a problem. I just want to make sure that I'm giving you guys what you need, not forcing what I need upon you. Does that make sense?
Gotcha.
Yes, absolutely.
All right, so we'll go with the fib levels and a downtrend line, and we will need some type of counter trend line to help us establish the breakout. We're still going to need something to that too. So is there anything else that you guys may consider or you think you may need during this deal?
Hey, X.
Yes.
I think you mentioned earlier that you traded on the 15-minute charts and you wait for that first 15-minute candle to fulfill before you jump in.
Absolutely.
Okay. Gotcha. And that usually confirms the direction pretty good.
Yes, sir.
Okay.
Yes.
Gotcha.
We
weren't. All of us were kind of playing around with it this week, but I don't know if we were doing it. I know I wasn't doing it. Couple nights ago over in Great Britain, there were several key announcements, and one of the governors of the central bank spoke, and that made the pairs go all over the place. And but they were in the middle of the night, 2 and 3 o'clock in the morning.
Right.
And,
right.
looking at it in hindsight, I definitely can see it. Had we waited to the 15-minute chart, to actually fulfill, you could have caught all those pips going up, even if you, had conservative estimates just to get 30 or 40, 50 pips. You could have definitely got them over most of those pairs.
Sure. You're absolutely right. You're so right. The thing about it, when you start dealing with these fundamental announcements, man, it's a lot of times we jump the gun, especially when you're dealing with stuff like non-farm payrolls, because there's an overall temperament that traders, the bulls and the bears, are fighting over the positioning before the announcement is even made. Now, there's a way that you can go in there and do that. You can wedge it, but you have to make sure that you move with the pre-consolidation in front of the announcement. Now, it's difficult to do that when you're trying to trade more than one. A lot of times I like to trade a basket right there inside of an announcement. And the best way to do that is pull up all 6 of your pairs, wait for the confirmation of the breakout, and then just plug in, and plug in on all 6 pairs. And then you look up 800 pips later and you say, "Ooh, that was a good day."
Yeah, if I can add to that, with the non-farm payroll, I sent the guys, because we have like a text thread, that I actually wedged a good majority of the USD pairs. And I saw that the majority of the pairs that I had that had like the USD getting stronger.
Mm-hmm.
So, base currency, you sell or buy that, vice versa. Within maybe 30 minutes to an hour of the non-farm payroll, I was up maybe about 400 pips, and I kind of took profit on that. So I did take a couple losses. I did take a couple losses, but overall I came out with like 350 as far as pips are concerned.
Nice. I'm getting ready to show you guys this this chart here in just a second. This is what we traded yesterday. I had every intention not to trade yesterday. I actually told my wife that I wouldn't trade yesterday, and I fired up my terminal, and sorry, I had to trade it. Had to.
You talking about the British pound pair?
Well, it was I traded the pound US, and this is what happened. I actually traded the pound Jappy and the pound US. This area right here is where I was concentrating on. This was the break right there. That was the breakout right in that little box right there. And this is a 2-hour chart. We got this breakout right there, and I entered on this candle right here. Right there is where I entered, right there. And we took that pressure all the way down, and we actually got stopped out right here, right on that candle right there. But we had already captured this pressure right there. And that's because we waited until it broke out. It's a real effective way to trade it when you wait for the breakout. Now, you can wedge them. There's nothing wrong with that. The problem is if your entry on the north side and your entry on the south side are too close together, a lot of times you'll get in trouble. Now, you also have to consider that certain brokers won't let you trade directionally. I think FCXM will not let you do that. You can't put a position on an opposite direction on the same pair. Talanex, however, they will. So we have to keep that in mind also going forward to make sure that we're not implementing a practice or suggesting a strategy that everybody can't utilize. Now, I'm never going to say, well, you got to take this broker. I would never make that recommendation for legal reasons. I can't make that recommendation. However, wedging it, and what we would do, we would take the wedge and put an entry here, and then we would take another wedge and put the entry there. That way, it doesn't matter to us which way it breaks out. Now, the problem with that is if you get caught in that box right there because your entry is too close on the north side and your entry is too close on the south side, you got problems. Really, really big problems. That's the worst thing to do, is to be caught in this box because you got filled on the north side and you subsequently got filled on the south side on the whip. That's why I prefer to make the breakout to where you're entering that trade down here after it already confirmed the breakout. Now, mind you, this is a 2-hour chart. So in this candle right here, we had a whole lot of information going on inside a 15-minute candle on this particular candle right there. It's
see, that makes,
sir?
That makes sense. I was saying that makes sense because I the way I created my wedge was I was like maybe 20 minutes ahead of the announcement when I start, looking at the pairs. And I know that you mentioned like 50 pips is typically enough room to kind of prevent you from the whip as far as the stop loss. But that entry point was where I was like, okay, is the entry 50 or is the stop 50? So what I did was I ended up just creating like 20 pips for my buy stop and my sell stop, and then 50 pips from that. So okay, I think that kind of gave me a little.
Let me do this, guys, because this is actually getting ready to turn into some good stuff. Let me pull up this right here. Something that you guys see all the time. All right, here we go on. Let's see if I can turn this into a 5-minute chart.
Just pretty much is the same thing I did as well earlier in the week.
Okay, this is a 5-minute chart. This is on the GBP US. Normally, what we would do, guys, is we would take this box of consolidation right there, and we would go to the highest high of that consolidation, which would be right about there, and then we'd add 15 pips to it. So we just ballparking it. We're not calculating right now, but just ballparking it. And then we come down here for this particular entry and pull this one down and say, here's our entry to the south. This one right here. So if this thing blew up and went north, we would get filled right here. But here is your entry on the south side going down. That is the wedge in its primary principle, because you have two active entries, one going north and one going south. This is what you do when you don't care which way it's going, or you don't know which way it's going, which is typical of us traders. We don't have a clue which way this thing is going because we don't have 15 floors of analysts to research the information and create a spreadsheet with 20 years worth of data surrounding this particular calendar event. So we have to basically go off what we see and trade what the charts say. Now, you have to take in consideration that this entry point, guys, as this consolidation starts to move, you have to move this entry point with this consolidation. Curtis and I can both tell you the stories about what happens when you don't do that. Now, you see where your entry is down here? This one down here? If you didn't move that entry down as that pressure started coming down, as these candles started to fall, if you didn't move this particular entry to the south, if you didn't move that down, you got filled right there on the spread increase in front of that announcement. So if this thing filled you right here and then blew north, you're going on a 50 pip stop, whatever your stop was on the north side. Now, what I like to do as far as the wedge is concerned is take for the south. For this entry right here, I'd have my stop right in front of the entry to the north. That way, if this thing blew north, I'd get stopped out at a defined entry. But I would also get picked up on the north side, which would cancel out this loss right here on the south side. Does that make sense?
Gotcha.
Now that's
absolutely.
This right here is an option strategy. We just took an option strategy and applied it to a forex trade. Because when you go to TD Ameritrade and you're trading options, you can select the type of strategy that you want to use, be it a butterfly or iron condor. This is no more than a butterfly. That's no more than what it is. because nothing will happen. You will not get hit as long as this activity, this price action right here stays inside this box. You don't make money until this price action gets outside of this box. Where traders get in trouble, and I've been one of them, is where you put your entry right here. And then you got filled on the north side because you were too close to this candle, and then you automatically took yourself on a 35 pip ride south because it went down. That's what you don't want to do. You have to give this thing room to breathe, guys, because if you don't, you're going to take a loss that you ordinarily wouldn't incur. Now, the one thing about this is you have to take into consideration the fact that you need to give the market some pips before you enter the trade. Let this thing show you your hand. Because when we get this close to this doggone entry, there's going to be problems ensuing. So you have to be willing on a fundamental announcement to give the market 50 pips of running room. And all we're doing is giving the market a head start. Not that Mr. Johnson needs a head start from anybody, but if he gives me a head start, I'm taking it. That's the psychology that we apply to wedging these trades. Let's give this thing 50 pips because now we can comfortably enter this thing and we can adjust our lot sizes based on our comfort level about this trade. The problem is when we see this thing start to move, we want to go right now. That's why I have a primary rule when you do directional trades is make sure you know what the heck you're doing on which way this trade is going. And if you give it a 15 minutes room of breathing, a lot of times it already has qualified which way it's going to go. If you wedge it, give it some space, guys. Get out of the way. Be willing to give this thing 30 to 50 pips so you don't get caught in this box. If you've never been caught in this box, good for you. But if you do get caught in this box, you just paid your tuition. Because this right here, it's going to hurt, guys, because now you're dealing with a 18 pip spread and you got filled. Because if you guys watch the spreads long enough, you'll see that moments before that announcement, those spreads go bananas. And it's designed, that market is smart. It's designed to catch people that are too close. And then you get caught in this box and it's brutal. It is absolutely brutal to watch your money go up and down so doggone fast. And there's absolutely nothing you can do about it. So you get caught in that box, you are getting ready to turn into a economic punching bag while all this activity is going up and down, and then you'll see that one of your trades automatically dropped off because you've been stopped out, and then the other one keeps on running. Hopefully you didn't get stopped out on the backwards consolidation in front of that announcement. It's happened to me, guys. It really has, where you get caught and you get stopped out before the announcement starts to fly out. And that sucks because now it's too late. You did all that work. You did all those trend lines. You built your trade before the announcement, and then you're stopped out 18 seconds until the announcement on the spread increase. It's a terrible thing. That's why we want to take and bring this to a live environment so we can just kind of get a cup of coffee, wait for the announcement, and trade it comfortably. We want to trade comfortably and confidently, not emotionally or afraid. We don't want to do that. That make sense?
That definitely makes sense, sir. Because when we're trading confidently, that's when we feel comfortable with the, with our volumes that we're going to be placing our orders at. Our risk management, I would say. At least that's what I do.
Absolutely. Let me see. Does anybody know how to take all this stuff off of here? There we go. Delete all. I'm trying to familiarize myself with MetaTrader, guys, so bear with me if you will. All right, perfect. Now, if you notice right here, guys, we had a trend line right there. You see that? But we also had a trend line right there. You see that?
Gotcha.
See, there's 2 trend line breaks right in front of this announcement. This right here is considered the little bit of consolidation right here in front of that announcement that took place right there. So that's why we want to give it time. This is a 5-minute chart. If you go to a 15-minute chart, you see the difference? Because we had our concept of entering this trade north right about there, and then we had our concept of entering this trade south right about there. But after this 15-minute candle closed, you see the direction? So now we're not even worried about this north. It crossed that counter trend line and fell apart. Now, yes, it crossed this counter trend line, but that was before the announcement. We are not even considering getting in this trade before the announcement. If we were getting in this trade before the announcement, it had to be way over here sometime the day before. That's why we want to turn to a 15-minute chart, because a 5-minute chart and a 1-minute chart is just way too noisy. You see on this 5-minute chart or this 1-minute chart, all this stuff right here, this is the consolidation that happens in front of the announcement. And it's just way too noisy, because when you saw this happening, this area right there, when you saw this information coming, you probably say, man, this thing's getting ready to go north. And then 1, 2, 3, 4, 5, 6, 7, 10 minutes later, man, it's going to go south. And then 1, 2, 3, 4, 5 minutes later, man, it's going north. And then you see that this is the actual 830 bar right there. And then you say, oh man, this thing's going down. And then you enter the trade right here, and then it pulls back up. Oh man, I need to close this trade, man. This thing's going north. And then you get in there right here going north, and then it falls apart. And then you're like, man, I just can't win. Yeah, you can. You can win. You win it right there. You win your trade before you put it on. When you look at that 1-minute chart, it's just way too much going on. It's way too much. Now, there are some scalpers that use that 1-minute chart, but when you start dealing with fundamental announcements, you will always see this consolidation, guys. These are bears and bulls fighting over the position. This is pre-snap information. This is Tom Brady reading the defense. This is Peyton Manning checking out of Omaha. This is all this stuff that's going on right there. We don't care what happens until after the ball is snapped and we start to see the coverage. Once we see that running back running a sweep, then we can send our linebackers over there to get him. If he's coming up through the A gap, we'll meet him in the hole. If they're running an out route, let's go and get him out there. Let's cover him out there. But we have to be patient and wait, because when you get inside these smaller time frames, they get really, really busy, guys. And we don't want to get caught up in that. This is where it gets emotional. And you're saying, yeah, man, it's going down right there. Oh, man, it's going up. Man, it's going down. Oh, yeah, it's definitely going down. Definitely going down right there. And then you enter right there, and then you get stopped out 15 pips later, 20 pips later, or whatever this price activity is right there. So just turn to your 15-minute chart. Look at it right there. Then flip to your 1-hour chart, and then you ride it all the way down. This is where we took our profit right there as this thing started to pull back, and that was right around 1 o'clock, 1:30, somewhere in there. Not too bad of a trade. Everybody good on that?
Gotcha.
Yeah, that football analogy cleared up nice one.
Say again, sir?
I said the football analogy cleared all of this up for me.
Yeah, man. Yeah. We that's funny, right? This guy's a trader. He's talking about Peyton Manning. Get me? Yeah, I mean, it's just, I mean, sometimes we can look at things in a different concept, and it gives us a little bit more clarity on at least the idea behind what we're going to do, because Curtis and I have traded a fundamental announcement actually on a conference call, and we had different results because we didn't move with the, if you look at back here on this 1-minute chart, this is what I'm talking about, where you have to move your entry with the price activity. Because if you originally had your northbound entry right here, and then on this candle right there, you have to move this. You have to get out of the way. I don't know. Well, you got to move this up here. As this price activity is moving, you have to move with it. Because if you left your entry right there to go north, you're in trouble. You have to get out of the way of this thing as it starts to move. If you want to do it on a lower time frame, for instance, here, as it starts to go up, you got to move. You got to move. You got to move. And then it comes down. Then you got to move. And you got to constantly move your entry on the north side and the south side in front of this announcement. Now, right here at the announcement, if you're not moving with it, you're going to get filled because the doggone spread is going to be so high. That's emotional, guys. It takes a lot of work to be able to do that. It's nothing wrong with doing that. Make no mistake about it. There's good money to be made by wedging these trades. But if you're trying to wedge the trade and you got 6 pairs, you're going to need a whole lot of mouses and cursors to be able to move all of them at the same time. The difference is when you got a 15-minute chart up, you got your entry way down here on 4 different charts. And all you got to do is just sit back and wait to see which way they go. You can put your feet up on the desk and just wait. Now, let me tell you guys this. A lot of times you won't get this breakout right here. Sometimes you get yourself prepared for a fundamental announcement and absolutely nothing happens. That's okay because nobody lost any money. You just want to make sure that you're primed and positioned and prepared to make the decision when the charts do explode. Because this little candle right here, you have to be willing to give the market that candle. You can have it. I'm not interested in these 60 pips right there. I want these 200 pips right there. And I'll give you the 60 pips. Mr. or Mrs. Market, I'll give you 60 pips in order for you to give me 200. I'll take that deal all day. But you have to be patient and you have to be willing not to go after all of it. Especially when you're dealing with a basket inside of a fundamental announcement. There's plenty of room for you to give the market what he or she wants in order for you to get what you need. If we take that psychology going into it, guys, there's a lot of fun to be had on fundamental announcements because we know when they're coming.
Yeah, that's beautiful because there were a couple of them this week that really nothing much of it came out of it, but there's usually one per week to where you're going to get some nice movement. So if we could sacrifice trying to get 1,000 pips to get 300 or 400 once a week or once every big major announcement, I think that would be great.
I agree with that. I agree with that, and that's why we decided to collectively to say, well, let's do this in a live environment instead of everybody being scattered out and this information comes out and we were looking at a Twitter feed and we're looking at a Dropbox and waiting for the information to come on the app. Well, I think it's more effective to just pull everybody together because we know what time this is going to happen. For instance, my wife is an active duty Army major, so she wants to trade a fundamental announcement. She can adjust her scheduling around this 839 farm payrolls announcement. And a lot of people that are still on the job, they can make that particular provision because this doesn't happen every single day. 2 or 3 a week, 5 or 6 a month that are red calendar events. Those are the only ones that I concentrate on, the red calendar events, the stuff that has a high probability to inject a lot of energy and volatility into the market. That's the stuff that I concentrate on. The yellow folders and the clear folders, not so interested in that. We're talking about non-farm payrolls, Janet Yellen. If it's Janet Yellen, I'm selling. Janet Yellen's on the microphone. She's testifying. We need to be on that. We got Draghi on the mic. We need to be on that. We have bank statements and bank rates. We need to be on that. Oil inventories. We need to pay attention to that because we can trade that and then turn right around after that and trade the commodity pairs in conjunction with the announcement, the CAD pairs. All we do is just turn around and put on a directional trade with the CAD pairs for a couple of hours and be done with it. Now, this is an operating, breathing body inside of our weekly strategy that we already have in place. This is just extra money. I call non-farm payrolls, I call it payday because it happens on the first Friday of every single month, and it usually does something. Usually. Normally it does something. So I think we had a ridiculous move in August of last year when they released the ridiculous numbers. That was the chart that I sent you, Curtis. I think you guys were in North Carolina. And that's the bar, it pushed all the candles off the screen. And it was amazing. It was a dream trade. Those come around now and then. But if we position ourselves consistently to be in front of these announcements and prepare for these announcements, there's a lot of money to be made right there, guys. And I aim to get some of it.
Amen, bro.
All right, so
All right.
if that's all, guys, you guys have decided to have some fib levels on there and the trend lines, much like this uptrend line right here and this downtrend line break right there. And then once we get that confirmation, we'll start putting some trades on and we'll run with it.
Sounds good.
All right, sir.
Is there anything else, guys?
Awesome.
Sounds like a plan.
Hey, yeah, X, I have a question for you.
Yes, sir.
Going back to WG,
Yes.
when are you guys, what's your target date for you guys coming on board?
Say again, sir. I'm sorry.
Oh, no, I was just saying, in regards to WG, what is your time frame for coming on board?
We're on board.
No, I'm saying as far as doing trade alerts, sending out your alerts.
Realistically, this week, probably midweek. In the release that they said that we would be on board as of April 1st. However, the conversion of the way that we trade on Sunday night, it's going to take some time to get the WG community accustomed to trading on Sunday night because as I understand it, that's not what they normally do. So we had that conversation at corporate about the people that are used to the 2 or 3 trades that come from WG on the active side or 4 or 5. They're generally not used to Sunday trade alerts coming out. So it's going to probably take me a week or 2 to get the Sunday trades for folks to get used to it for lack of clarity on the marketing side. But I do plan on sending out some alerts this week. There's a issue at hand with the way that the alerts are being sent out. The input of the information to create the alert is cumbersome, to say the least.
Okay.
It's very, very cumbersome, guys. I've never seen anything like it. However, they do have something in place right now to change that. So right now, as it stands, it takes about 10 minutes to build the alert.
Wow.
Yeah. Wow.
Yeah, you can miss a whole lot in 10 minutes, can't you?
Well, the problem is, yes, you can. The problem is, as I'm going through and I see trades, we got alarms going off, this trend line's being broken, that trend line's being broken. You guys have seen the frequency, especially during the 1 hour charting session. I think one day we sent out like 14 trades just back to back to back to back to back because we see them, we take them, we move on. We see them, we take them, we move on. With the current structure of the alert system, that would make me have to see a trade, stop, build the trade, 15 minutes later, go back to chart. The problem with that, guys, for me to be perfectly honest with you, is when you are in a trading mentality to break that cycle and do some coding to send this alert out, and then you have to get back in your zone. I don't know what that's going to look like because I've never done that before. When I trade, I put the information on the sheet, update the sheet, boom, we're gone. Next trade,
Right.
next trade up.
Right.
So it's
Hey,
gonna
fellas,
be a learning curve for me. Not so much for the overall community and reception of WG. It's just gonna take me a couple of days to get acclimated to how this system works. And in addition to that, the system is gonna change. Now they have made it up there at corporate. They put a provision in place to remove that burden from me immediately. I can take this trade, send it to somebody, and somebody else will build it. The problem that I have is the time that it takes to build it from the time it's received.
Okay.
So that right there is going to prove to be challenging, to say the least. Now, the new software is on its way. It will be here, and it will be here shortly. And once it gets here, this is WG software now. Once it gets here, it's going to remove all of said complications. I'll be able to chart just like we're doing right now, input that information, boom, it's out.
Oh, that's good. That's good.
And that's coming. It should be here this week, midweek actually. And you guys will see you'll start to see some revved up frequency. We're not going to do like we do here at Team Elite with 15 trades a week. We're not going to do that right away. But Team Elite, we will still go forward as we have, regardless to what software packages are implemented at WG. I want to be clear about that also. We're still going to keep on pushing.
Okay, loving it. We're loving it. Loving it.
But to be clear with you all, I honestly don't have a concrete date, because tomorrow we're going to be looking at some things, and then Monday I'm going to start to look at how we can filter in and how we can dissect the charting to get ready for the receiving of WG. Because we concentrate on 20 charts here at Team Elite, and at WG we're going to probably concentrate on 6 or 7, because this is what we don't want. We don't want the macro guy and then the swing guy trading in one direction and I'm trading in another direction.
Right.
Because it will cause massive confusion at the WG level as far as the recipients of these alerts. Man, I'm already long this position and I can't take this position because my broker won't allow me to go in the opposite direction on an intraday trade. So I have to make sure that I am doing directional trading with what the macro and the swing trades are already suggesting. So that right there may remove a trade in its entirety from the WG alert. It will not on Team Elite though.
Okay. Sounds good.
Fair enough?
Yep. Hey, look, one last question for
Yes,
you,
sir.
X. Do you have a goal, and this is on the WG side, do you have a goal that you're going to set, like in your mind, monthly, that you're going to try and give WG from a PIP perspective, monthly or weekly?
I have a directive. And that directive is to the tune of about 300 pips.
Okay. And that's monthly, right?
Yes, sir.
That's perfect. Okay. Just wanted to know.
Mm-hmm. That is not our objective at Team Elite.
Okay.
It's not. Curtis and I have had that conversation. Chima and I have had that conversation. Actually, Chad and I have had that conversation, because what we're trying to do at the WG, we're trying to change the culture of WG to make it more valuable, to where you can get more than one thing, and it's just not pips. It's overall value by way of the information, by way of the education, by way of the grooming process in being a trader on your own.
Okay.
That's the directive that they're taking here at Team Elite. My job is to get pips, because I got 3 boys and one of them turned 11 in 3 days. And I said, wait just a minute here. What's this turning 11 stuff about? So, I still have to do what I have to do as an individual trader here for my family at Team Elite and my family here in Maryland. So we're going to keep on going, guys. Anything else?
Awesome. Great job, bro. Appreciate all your work.
No problem, man. No problem. No worries at all. I hope to see you guys here soon in San Antonio to meet personally and shake some hands and get to know you guys on a more personal level. However, we're going to look to whatever situations may present themselves during the course of the week. We can get ourselves together and have these type of discussions open air at any given time, preferably on the weekend when everybody has an allocated block of time. But let's go out and let's trade happy and let's go change the world one pip at a time, right?
Yes, sir.
All right, guys. Thanks for showing up. I appreciate you guys. I really do. Your input, the commentary, your information, your suggestions and recommendations gives me the information that I need to present to you what we should do. So it's a revolving door. It's not one man standing alone. It's all of us shouldering together because collectively we can make each other better. And that's the whole concept of what we do here at Team Elite. So I'm just glad to be a part of what you guys have already established. And we'll just try to keep this thing going. Thank you. I
appreciate that, buddy.
Yes, sir. We talk to you.
Awesome. Thank you.
No problem.